mechanic put his Kevlar on wrong. I guarantee you'll meet up with the suicide bomb. Hell broke loose. Hell broke loose. Big fucking ditches in the middle of the road. You pay $100 just for filling in the hole. Listen to the general every goddamn word. How many ways can you polish up a turd? And left, right, left, left, right, left, right. Hell broke loose. Hell broke loose. Hell broke loose. How is it that the only ones responsible for making this mess got the sorry asses able to a goddamn desk? And hell broke loose. Hell broke loose. Left, right, left. What did you do before the war? I was a chef. I was a chef. And what was your name? It was Jeff. Jeff. I lost my buddy and I wept. I come down from the meth, so I slept. I had to go to home, but I left.
Hey, it's Soleil, and this is episode 346 of the Orange Pill Investor. Super bullish about MicroStrategy, so naturally I want to talk about Mexican cartels and the war in Gaza. And if you're wondering, like, wait a minute, this is a bait and switch. I came here to learn about options, and you're talking about political stuff. Just keep in mind that the name of the show is Orange Pill Investor, not Orange Pill Investing. So I do what I want to do. And that song was Tom Waits. It was Hell Broke Loose, which was about Jeffrey Lucy. And he ended up getting like PTSD, vet, and ended up like committing suicide. And that's probably arguably one of the best anti-war songs of all time. You could throw in Rooster. I'm not familiar with any of the older 60s stuff. I'm sure there's a million of them. But I get a little bit of annoyed. You know, I'm glad that Kamala lost. I think they were trying to steer us into World War III. So I had modest hopes that Bitcoin would fix everything. And but you know what? Bitcoin's a bit of a bait and switch too. Like you get into it for number go up, and then after a couple of cycles, you end up being a fully self-actualized human being once you basically dig out all of the fiat source code from your programming. So you'll have to forgive me for a little bit of a bait and switch today as well. It'll only take 5 minutes. I'm a little bit annoyed with Elon talking about he wants the U.S. military to take care of the Mexican drug cartels, S with a plural. Let's just keep it real. It's not just like one cartel that we can just go in there, take out their boss, and that's the end of it. And then your boy Trump talking about we're going to take over freaking Gaza. And, Elon's an intellectual, and he can build robots, and he can probably do Doge and AI and all of that good shit. But I'm not going to go so far as to tell him to shut the fuck up about stuff that he doesn't know, because everyone should be vocal about what they think. But just because the guy's smart as shit doesn't mean he understands that prohibition doesn't work. And and just because it seemed like Trump was going to get orange pilled for a minute, like neither one of them are fully orange pilled. And like I had high hopes. He was surrounding himself with people like RFK Jr. and Tulsi Gabbard and all of those folks, but he's still kind of a clueless buffoon for the most part. So so why shouldn't I stay in my lane? So I did 8 years in the Navy. In particular, my job was a hospital corpsman. So not only did I swear the oath to defend the Constitution like everybody else who enlisted, but I had an additional an additional swearing in when I graduated from hospital corps school to not let any harm come to any patient in my care. And that's kind of how I feel about my veteran brothers and sisters. And I don't really take kindly to people getting them killed for no fucking reason. Now, I know some other veterans that I argued with are down with it, and they're like, you know, they're doing all of these bad things, and those are emotional arguments, and I don't really fall for those anymore. The whole if you don't stand for something, you'll fall for anything. That's all emotional bullshit. And people try to manipulate you into thinking and doing certain things. And I don't even fault them for that because all of life is manipulation. Like from the moment we're born and we try to manipulate our parents into giving us some food or changing our diapers, everything is manipulation. So that's just, the reality of life. But um, so the war on drugs, right? I come from a long line of alcoholics and drug addicts. So it's a little bit near and dear to my heart. And it's kind of crazy that we just had prohibition on alcohol just 50 years ago. Like there's people alive that remember that crap. There's a guy that got interviewed on Soft White Underbelly, and he was a drug runner. Used to fly shipments out of Mexico, weed and stuff back in the day. And I really liked his quote. He said, "I was an outlaw, but I never felt like a criminal." And when you have a victimless crime and you make it a crime, you're basically just turning non-criminals into criminals just by snapping your fingers. So it would be nice if we learned that prohibition has never worked and can never work. It's simply not possible. So it would be nice if the powers that be would not get my uniformed brothers and sisters killed for things that they have no business doing. If folks want to defend, like, some land invasion, uh, that's fine. Securing the borders, I got no problem with. Um, but then, Gaza's same story. Like, oh man, I kind of thought that the concessions that Trump got with the ceasefire over there was like proof that the Mossad didn't have incriminating evidence on him. Like, there's got to be a laundry list of evidence against uh, our homie Biden. And I thought, okay, you know what? Uh, they must not have anything that they can blackmail Trump on if he's actually able to make concessions. But I can't figure this out. I don't really know what the hell's going on over there. But I would really like to not be fighting in foreign wars and subsidizing foreign countries' interests with our children's lives and money. So I think that's all I got to say about that, and we can get on with the fucking trading. Thanks for tolerating that, if anybody's still here. Dill, what's up? What's going on, dude face? Roll days. Absolutely. Keith says, good morning. Do you, brother, your channel? Uh, what is this? What is this icon? Do I need my glasses? I can't even read what that says. Dude face Nithu, lesson they haven't learned. You get too many wins and then you get greedy. They are due for a defeat at this point. Yeah. That sounds like, unfortunately, the future. 94 says Nithu looks like they exhausted all the long-term call options. Then we should start rising up. Thoughts? They exhausted all the long-term call options. They can. We should start rising up. Oh, yeah. I mean, I don't know if it's going to happen today or next week, but I do think it's Q1 has. There's got to be some fireworks in Q1. So all of these covered calls that I'm selling are definitely playing with fire. But so I saw climb that ladder. He basically took all his covered call positions off, and he's got a metric ass ton of contracts. He could, no joke, it sounds like he could, like, I think some of his weren't in the money, but he could probably formulate performance covered calls on like 1,000 positions. He took them all off. I'm not quite to that level, but I do agree with his belief that some bullishness is like gotta be around the corner. Now that doesn't mean that we can't feel some more pain before the bull starts, but it does just kind of seem like tempting fate a little bit here. When we pumped in March, we had 6 to 7 months of chop, and we've only had chop since November, so that's only like 3 months. But listening to that earnings call, it sounds like strategy is going to start laying off the ATM and adding convertible bonds. And then, of course, they've got strike. So even if they do hit the ATM, they can actually, they can hit the MSTR ATM, or they can hit the strike ATM. And they're just buying Bitcoin upon Bitcoin from all different revenue streams. And I listened to Dan Hillary on Tim Kotzman's live the other day, and the first half was riveting. It was like Tim's coffee cup on the fucking table. I couldn't even tell if he knew he was live the whole time. I was like, did he accidentally go live here? But that was kind of hilarious. Luckily, I watch at 2x speed. I was a little corn fuzzled for a minute there, but the alpha that came in after that was pretty damn good. I was impressed. The main thing that stuck with me was, I don't think Dan literally said it this way, so I'm going to misquote him, but it was kind of like, because they had that slide where they said, look, the ATM was only like 2 or 3% of the entire trading volume. So the fears that the ATM was suppressing the market, I think, were overblown. But what it does seem like is, since people see those weekly buys every Monday, they know that the ATM is happening. So because not only do they blame the ATM for everything every time it goes down, but there are people out there that are probably selling because they know that the ATM is happening. So it's almost like the idea of the ATM itself isn't causing the stock to go down, right? But the thought of the ATM is psychologically messing with investors' heads and convincing them to sell when they might not otherwise, you know, just hodl through. Um, but the other piece to that is that some people trade God damn it, trade strategy as a leveraged Bitcoin play. Well, every time they hit the ATM, they de-lever. So if you're gonna look at MSTR at like 30% leveraged, and now you might assign some kind of premium or multiple to that, right? Like, maybe you think the 2x MNAV is justified because they have 30% leverage. Okay, they hit the ATM and now they're down to 20% leverage. So there might be people that are just trading off of just how much leverage uh strategy is taking with their Bitcoin holdings. And if that's true, then they are about to hit the strike ATM, which is not going to dilute MSTR shares, and they're about to hit the convertible bond market. And those people will hedge, so they take a long position, but then they short it and they end up being neutral. Fine. However, the point is that the leverage is going to increase in Q1, and strategy is going to purchase a metric ass ton of Bitcoin. So there's going to be a bunch of buying pressure for Bitcoin. strategy's leverage ratio is going to go up, which in my mind is bullish. And since the ratio of ATM to convertible bonds is going to decrease, meaning less ATM per convertible bond offering, that should be psychologically bullish for people who are just worried about the ATM. Like they go to sleep thinking about the ATM, they wake up thinking about the ATM, and the ATM just lives rent free in their freaking heads 24/7. Those people can be like, oh, whew, I can buy more MicroStrategy because, you know, I can kind of see where they're coming from though too. Like, okay, if MSTR is selling, why wouldn't I? I guess that kind of makes sense a little bit. Um, but anyway, so that should all of these reasons for not just diamond handsing your strategy shares are kind of dwindling. But that doesn't mean that we won't see 250 before we see 650. I don't make any short-term predictions, and that's why none of my long call positions are even in Q1. So the earliest long position I have is June. I got these debit spreads. I got some long June 1080s. And whether we get a pump by March, I will roll these out. Once these are 90 days to expiration, that's it. My time frame is not until June 20th on these options because I don't want theta to start increasing on me. So in March, mid-March, I will no longer hold June 20th. If I'm still bullish, I'll roll them out to June, let's say July, August, September. I don't even think we have September's actually. Can't remember if it's September, October's. Okay, so we don't have October's filled in yet. Eventually October will get filled in. So in March, I'll roll my Junes to September, and I'll either take profits or take losses. That's when I will make that decision. Yeah. So I'm super bullish, but that's 6 months, 12 months bullish. I'm not 7 days bullish. Now, with that being said, it's kind of like a ticking time bomb. And when it happens, all of the covered calls that I have on will get wrecked. There's just kind of no way around that. For someone who already has other income, you might be fine with taking all of your covered calls off and just waiting for the rally. But for me, this is my only source of income. So we just had the first of the month. I just paid bills, so I'm good for probably another 15 days, but I'm gonna have to take some profits when I start writing checks here in the next couple of days for stuff that's due, in the middle of February. I've also got a Vanguard account from my job from when I quit, and I took out a loan, of course, to buy strategy shares with. And so in order to transfer that retirement account over to probably, I don't know if I'll do a separate Tasty Trade account or if I might probably just transfer it over to Robinhood so that way I can have an IRA in each. But I've got to pay like 10 or 15 grand on that loan so that they don't count it as a disbursement. But I really need to get that money out of Vanguard. It's really pissing me off that it's invested in God knows what it's even invested in. So I need to get my hands on that money so I can plow it all into the strategy. But so the point of that is I have to take some profits or just give in and use margin, which I'm trying not to do. So for me, I've got to sell. Well, I don't have to. I can just sell positions straight up. But I would prefer to sell a covered call with the potential of getting wrecked than to actually take the position off now and guarantee that I'm taking money off the table now. So I've still got to sell just enough covered calls to pay the bills. And also, I like to have enough covered calls on just to at least keep theta positive because I feel like that's paying the rent on all of these long call positions. So all of these long calls here adds up to 650, 700-ish, 6 to 700-ish, you know. Oh, here's the total right here, 615. Right, so there's like $600 decaying out of this account just from these long calls every day, and I like to have just enough covered calls on to at least pay for that. I feel like that's kinda like keeping the lights on. There's no theta decay on shares, so if people wanna hold shares, shares are not decaying, so they don't really have to worry about theta. But an option seller's account, you really can't call it an option seller's account if you don't have a net positive theta. And so you can see that my 335s that I sold yesterday basically broke even for me today. And I will probably go ahead and roll them out to, I'm just going to close them first. That way I can see what my net theta turns out to. God damn it. All right. So my net theta is negative 668. On an account this size, it should probably be hmm, 2,000, 2,400 a day. That doesn't mean I'm capturing that much because I'm generally managing the covered calls when they're, 45 days expiration. I'll manage them after 2 to 3 weeks. So when half of that option is done, so $2,000 a day is probably only like $1,000 a day, which is pretty decent. So I need to turn this negative into a positive. I'm just going to go ahead and sell. I'm just going to look at next week. If I sell at the money, each option is going to get me 97 theta. So to come up with 600 and something, I need like 7 of these. And normally what I would do is, since I'm so bullish, I would probably just plow these into more long calls. Probably go out to June and just get like 10 of these. We got 5 grand. Yeah. I would just buy like 10 of these. However, I'm probably just going to need to leave this in cash and withdraw it to keep the lights on. So no reinvestment today. And after I figure out how much I owe Vanguard, I may have to come in and take some additional profits. So we'll see. But the other thing that I can do is I've got 84 uncovered shares here. I can just sell as many shares as I need to take profits here as well. So let me see if that's everything that I need to do. Yep, these poor man's covered calls are fine. Everything else is June or later. So I'm good with this. It does seem like the premium dropped quite a bit. I think I was getting paid 1,500. I mean, I did go up 2 strikes, but I think just last week I was fetching like 1,500 just above at the money. Still, if I was to go out and buy these shares today at 337 and then collect $1,000, that's basically a 3% return on capital for 7 days. Added up over 50 weeks is 150% returns. So even sacrificing 100% of the upside, that's pretty staggering returns. And the fact that the premiums are like lower, like visibly and notably lower than they have been recently, and they're still, prorated out to 50 weeks is still 150% is kind of insane. So yeah, I'm kind of biding my time and I'm just waiting for so we'll just say that's, 7 of the 14 potential positions I could have on these shares are covered. My poor man's covered calls are all covered. And somebody was asking me to cover these because Climb has a bunch of the Decembers and Januaries, right? But he took all of his covered calls off. So he doesn't have any of these positions here. When I do, when I have leaps, I generally like to cover them. But these 530s are kind of, I don't want to say they're not coverable, but I'd probably have to go out to like in order to make this a safe covered call, if I wanted to do one covered call for each one of these, I'd have to go like around the 590 strike. And there's just not a lot of premium at the 590. I mean, it's not terrible compared to other tickers, but it's not like the juicy premium that I would like to collect. However, there's a ton of upside built in here as well. So strategy would have to practically double in order for these to go in the money. I wouldn't call it free money, but if strategy does double by March, like it's practically got to double before you quote unquote lose any money on that strike. And it's above the 2 standard deviation line. So it's fairly, having that strike breached is going to be fairly infrequent. But anyway, on most of these positions, I am kind of in Climb's mental framework in that it just seems like there's going to be some type of rally, and I don't want to have too many positions on. I don't want to have too much unlimited upside covered. Like I end with like a slightly negative position, and this is going to fluctuate day to day. But I'm pretty satisfied with this. So I could add another 7 positions just against shares. And if we do get another pump to 550, 550 would put every single one of these in the money, and it's going to make it much easier to form a poor man's covered call against. I don't expect these Januaries to go in the money for quite some time. Be nice. Be nice if they did. But even these, like, um, the total delta between the 3 of them adds up to 80, so I could probably sell a covered call against all 3 of these positions. But, that would just be, I don't wanna say that's a desperation move, but I don't need to go to those lengths to add covered calls until Ivy rank is pegged at, 70, 80, 90, or 100 again. All right, that's enough about that. This is the Misty account. I signed up for drip. So I think mid-February, whenever this dividend gets paid out, it will automatically buy the shares for me. So we'll keep an eye on that. I should have checked. Yeah, I'm sure Misty's still beating me at this point, which is fine. Still early. The joint account, I went ahead and put all of the covered calls back on. Like I'm just kind of like barely breaking even on my net theta here. And still basically cost what I sold them for. It's only been open for 1 day. So there's really nothing for me to do here. I don't have any cash to spend and I'm not going to open any new trades. Same thing in my allowance account. I've had this open for 1 day at the 450 and no real buying power to speak of. So I've got this one covered call position, poor man's covered call. Completely speculative positions here. And then this is the account that I'm trading against Misty. I'm still psyched to see what Jeff Park's product, what they come out with. I think he said it was coming out in March. If it seems better than MSTY, then I'll just transfer all of my Misty positions over to that one and I'll trade against them instead. Let's see here. 0 days to expiration. Let's close this one. I wonder if this is going to let me close it. I double checked. This is a margin account, but it doesn't look like it's okay. Yeah, it is using margin. I think because I have so many strategy positions, it's not really giving me much margin use or allowances. That is. See what tells me what my buying. Saying my buying power is 24 grand. You know what? I think it was restricting my buying power just before earnings. Tasty Trade does that. So yeah, I just closed it, right? Okay. Do I want to open anything? I got my poor man's covered calls all covered. Nothing to do there. I've got my one out of the money here. I have negative theta. So I need to add another position. I'm going to do 1 week again. 345 strike. I've got 866 bucks to play with. And perfectly, I can buy one July 1080 for that. It's almost like it was meant to be. I got 30 bucks to spend. Sweet. So even though I'm going short on a short-term basis, every time I collect premium, I'm adding leverage long positions. So what I'm counting on is that when these positions inevitably get wrecked, that my unlimited upside calls will print money. And I'm hoping they will print more money than I lose on the short positions. So we will see if I'm able to just keep stacking enough of these things to cover these positions. The other thing that I'll do if the price spikes is I will convert some of the poor man's covered calls to shares and basically deleverage the account. This is some flexibility that I'm allowed to take as a retail investor that MSTY probably can't. I don't know if they have certain algorithms or, structures that they have to follow. I don't know how creative they can get with their contracts, but, as an individual investor, I can rotate into more leverage or back in and out of shares as I please. So agility is kind of the only advantage that we have as retail. So I have to kind of take advantage of that. Just barely, positive theta here. So I'm all right with that. Let's check the 5K account. A little bit of life being breathed back into this one today. So that feels good. I've got my two poor man's covered calls covered and plenty of time left on those. Nothing to do. Got my CLSK put. I need to close this. Sold it for $36 and I'm going to buy it back for one. So $35 profit, putting up 1,050 in collateral. Return on capital would be about 3% for the week. So I will take that all day, every day. Okay, they're gonna make me pay $2. Of course they are. All right, let's get the show on the road. I will pay your $2. Take your blood money. All right, so that's gonna give me $1,000 in buying power. And I think I'm gonna switch it up and go use that to instead of CLSK, let's just double check. I already checked earlier when I was on uh with my dad, but I've got 1,300 to spend, so I can sell a cash secured put in something like CLSK or IRON, or I could take that and I could buy like another 1080 in June. But let's just check. So if I've CLSK and IRON are trading at about the same price right now. So how do I decide which one I want to trade? It's all about the premiums, baby. So the 11.5 strike is $50. So all I really care about is how much return on capital I can get. I don't know anything about CLSK's fundamentals. I don't know anything about IRON. The only thing that I know is on the 11.5 strike for IRON, I can get 62, and the 11.5 strike on CLSK, I can get 50. So I can get 20% more premium on the same, putting up the same amount of collateral. And I'm going to do one better and just go right to the at the money strike, just below at the money, and collect 84. Well, let's see if we can get screwed on the bid ask spread. So actually the liquidity is not terrible, It's not amazing. So 90 volume, 260 open interest. See, this could be a tiebreaker here. Look how much more volume and open interest is on CLSK. This is kind of huge, right? There's 397 people bidding. And for iron, it's fluctuating, but around, between a 50 and 100, 150. So it's going to be much easier to trade CLSK to get fills, but I'm gonna go ahead and just go for iron for the big premium. This is like 7 this is like 7% return on capital. Putting up $1,200 and I'm getting $85. 1% of 12 is 0.12 times 7 would be 84, right? So this is 7% return on capital for the week. Does this mean that iron won't be at $8 a share next week? No, it doesn't. As an option seller, I only care about this premium. Now you can see I didn't get a fill here. So because of the liquidity issues that iron has that CLSK does not, I'm probably going to have to put this down to like 0.84. This should fill. It's literally, I'm asking 1 cent over the bids. So like none of these bidders want to come up and pay that extra fucking dollar. I'm reasonably certain that if I had come down this far in my bid ask spread on CLSK, it would have insta filled. So I don't know if this is the market makers being stubborn or if there's somebody on the, like me on the other end of this trade that's just like, no, I don't want to come up 1 penny. All right, I give. Uncle. Let's put in the frickin' bid. Now here's for fun. So I ended up bidding the 0.83, right? Let's see if I actually got it for that. See, this is hilarious. So they wouldn't sell it to me for 84, right? I was trying to sell it for, was it for 84? I thought it was 84. And they wouldn't fill. They wouldn't fill. They wouldn't fill. I actually put 83 and satisfy the bid, and then they sold it to me for 85 anyway. They gave me the 2 extra pennies. Sometimes this shit doesn't make any sense. All right. Subtract the options collateral from my cash. That leaves me with $189 to spend. Of course, they would let me spend some more on margin, but I'm trying to avoid margin use if possible. If we get a big ass crash, like if Bitcoin does hit 84 again, then I would probably be happy to dip into some margin use at that point. But for now, I sleep better at night not using margin. So I think this is all I got. Nothing else expiring today. All right, let's check the chats and see what we got going on. Niz says, love the little rant. I think I went over my 5 minutes that I said I was going to take, but whatever. Dude Face says, on Misty, they have a large long call at 390 that closes 221. They need it back up there or it's a big hit on their long and short call profit. Did you say 221? Yeah, see, I don't understand this. I'm assuming they have a synthetic, right? synthetics. So call it 390 on 221. Damn. I mean, I hope they get it. I don't even see a 390, but I'm sorry. There it is. Right below 395 where it's supposed to be. So they've got a bunch of these, huh? Yeah. And look at the theta on this. So 50 bucks a day is draining out of every single one of these accounts, and it's only worth 900. Like, that's huge. This is why I don't hold long calls under 90 days. And it's stuff like this that I just don't understand. Unless this is a synthetic, unless they have a buy calls with their sell put, I guess this would be fine because this is a forms a synthetic. The two of these, oh, where's the long call? Thought I selected it. A long call and selling a put, same strike, same expiration date, forms a synthetic. So if they have this, I can kind of see, but I don't know what covered call positions they have against these either. Yeah. Yeah, it would be nice if this went in the money for them. But they just, I think they're probably fine. They'll just adjust their positions and select a new strike based on the current price and then pay for it with selling some covered calls. So I don't hate what they're doing, but I don't think it's really optimal either. 94 says I pray Sailor announces a buy Monday from ATM, like on a little quick Thursday, Friday ATM sales. Bill, not much building the F-150, my man. About to get into options and listening into you. Infinity. All right, Keith says Ivy rank on on strategy is at 26. Can we talk about what adjustments should be considered as a result of that? Yes. So strategies Ivy rank is a little bit hard to compare to other stocks because when you've got these huge spikes, make this bigger. You've got these huge spikes, and then implied vol starts to contract, and it's down from 160 to 140, then your Ivy rank is going to be coming down, and maybe even it goes below 50, but Ivy implied vol itself could still be pretty high and have a lot more to contract. And November was huge. I mean, I'm hoping we get at least one more, maybe two of these in 2025 as well. But when we do, if implied vol is not over 226, then we won't get to 100 IV rank again. Like, let's say we just get to if we get to March levels and we get another 160, it's not going to have the same IV rank metric change. Maybe this says 50, 60, 70, but it might even have a higher IV than what we had in March. So IV rank is kind of a go by. And I think just in general, I think for Tasty Trade, it's kind of like anything over 25 is at least like doable. 50 is like, yes, go for it. and anything above and beyond 50 is like full speed ahead for selling options. But that being said, what if IV rank was 1? Like it was just in the toilet. But when I go to the options chain and I can get 3% return on capital for 7 days, that's still insane premiums. Now, granted, that will probably be double if IV rank is at 100, but the return on capital is kind of like that can't lie. The premium tells the whole story. If this was only $300, $350 that I could collect here, then I don't care if IV rank is pegged at 100. It's only 1% a week at the money, and that's like Apple level. Might even be better than Apple, which is why I don't trade Apple. So, this is a good indicator to watch, but you kinda have to look at the chart and you have to just literally go in here and say, "Is the premium meaningful?" Because like, that's the only thing that matters, is how much premium you're going to collect based on the value of the capital that you're having to put up against it. But to your point, with IV rank and the premiums kind of coming down, I wanna have just enough positions on in this account to fund my lifestyle and to pay for all of these longs that I have just been stacking like a madman. In November, I took a little bit of profits. I think I sold off like 20 of the Aprils and rolled them out to June and excuse me, actually to July. And ever since then, as the prices come down and IV rank has come down, I've started stacking these longs again. And I'll continue to do that until we get another November style rally. And I will I'll pay for whatever I need to pay for to roll. I'll let some things get called away if necessary. And I will use all of these longs to pay for, rolling if I don't want things to get called away. So yeah, a low IV rank environment like this, I'm selling less covered calls overall and just kind of trying to bide my time and wait for that pump. Mikhail says, "Climb that ladder's post really got me excited too." Yeah, man. He's just like 100% unlimited upside right now. Dudeface says daily IV versus monthly. I'm not sure what you mean by that. I think IV rank is going back a year, and then I think this market chameleon chart is 30-day. Yeah, this is the 30-day implied vol. I'm not sure if anyone's tracking daily. I don't know if there's anybody that has daily implied vol metrics. All right, Rye 20, or is that Rye 2 online? Are the 1080s supposed to hedge against the poor man's covered call? If you just do covered calls with shares, would you still buy them? Yeah, for sure. I would probably be more inclined to buy more of them because there's no leverage in these shares. So they're only going to get a one for one, dollar for dollar increase as strategies price increases. But these poor man's covered calls are going to get kind of like bonus delta based on the gamma value. So delta is the amount of money that the option will go up based on a $1 move, but gamma is how much it's going to go up for the second dollar and the third dollar. So let's just take a look at the December. I think I've got some 250s. Doesn't really matter. Yeah, so shares don't really have Greeks. Their delta is always going to be 1. But if strategy goes up from 339 to 340, this option is going to go up 79 cents. But if it goes up from 339 to 340 and then it goes to 341, it's going to go up 79 cents plus 0.0011 cents. Like this gamma gets added to the delta. And then if it goes up another dollar, it gets the 79 plus the 0.001 plus another 0.001. But, so delta is going to keep going up, but then gamma is also going to keep moving. And so as MSTR goes deeper in the money, let's just remember this. Gamma is 0.0011. I can't remember if this is going to go up or down as I get to the 200s. Okay, gamma is going down, which makes sense because the closer the delta can get to 1, it's harder to get increases. Like gamma can only increase delta until delta gets to 1.0, and then it's trading like a synthetic stock. So there are diminishing returns on gamma as it gets deeper and deeper in the money. But that's a little bit off track from what I was talking about. So the point is that you're getting some free upside with the leaps that you don't have with the shares. So I don't need as many 1080s against poor man's covered calls because this leap is also going to appreciate at some kind of rate. But selling covered calls against the shares, they're already 1 delta. So I'm not getting any I'm not getting any free leverage there. But I guess the real answer to your question is, regardless of whether I'm selling covered calls or poor man's covered calls, if I'm bullish, then I like buying these out of the money to hedge against, limiting my upside. I like doing this in both scenarios. That's the short answer to your question. Richard says, "Hey, another roll day. Time is flying. Absolutely is." And then says, "Press that like button if you're watching on YouTube." Thanks, Richard. Appreciate it. Emperor says, "Soleil, random question, but you've dealt with margin and you're wise. Uh, I have a less than 6% loan that I aped into Strike. What am I missing on that arbitrage of free money? If you don't want to answer, no problem, since it's not an options question. Still love." No, no, actually, I'm happy to talk about that one. So that makes perfect sense to me. And I actually did almost exactly what you're talking about. So you got a loan, it's 6%. And so it's so insane because you're guaranteed. I mean, like strategy as a company would have to fail. And even if they fail, I think the preferred stock has rights over the common shareholders, right? So the chances of you getting screwed on your 8% returns is very, 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 very small. So you're paying 6%, you're already getting paid 8%, so you're gaining 2% for every dollar that you borrowed, and you get all of the price appreciation from Strike, the shares itself. So any given moment, if straight goes up to 100, which it almost kind of has to go up to 100, right? They were initially trying to, they were going to fill them at 100. I think what 100 is the liquidation price. So it almost has to go to 100. Maybe not overnight, but I don't see how it trades under 100. So you kind of got like a free 20% return on your investment right off the bat just from participating in the IPO. But even if you didn't get that free discount, if you could get a guaranteed 8% and all you were paying was 6% and you offered that to Warren frickin' Buffett, he would give you his entire billions. Like he'd just be like, "Oh yeah, guaranteed 2% frickin'." I don't know if that's legit called arbitrage, but um yeah, it's just insane. I would borrow infinite dollars. So if you plugged that into the Kelly criterion, right? Let's just assume this was gambling, kind of is. If you plugged that into the Kelly criterion formula and you were guaranteed to pay 6% and you were guaranteed to get an 8% return, that's legit. This, like, I think that's the VIG on some of the most profitable casino games, like roulette. I think roulette and blackjack, I can't remember, but I think the VIG that they collect is like anywhere between like 1 to 2%. If you play perfect strategy in blackjack, you can get it down to like 0.5% advantage to the house, but you're kind of legit running a casino right now, and the bank is like thinking like they're thinking they dunked on you because they're collecting 6% free money, and you're like, "No, I'm dunking on you because I'm getting 8%." And you've got like all of the upside in the frickin' in the stock, in the preferred stock is like not just free, but like you're getting paid to get free upside. So I love it. Um, I didn't do the exact same thing, but the way that I figured it, I think it was probably after Quant Bros 1 and I finally realized what strategy was besides just a leveraged Bitcoin play. And I borrowed 30 grand off my HELOC. I borrowed another 30 or 40 from, one bank, another 35 from another bank. I borrowed 10K against my paid off SUV. I borrowed against my retirement on my job when I still had a job. That was through Vanguard. So that one kind of doesn't count because I borrowed my own money in that case. But I borrowed uh, between secured and unsecured debt. I borrowed like 110 grand and I plowed it all into strategy shares. And I sold, I think the worst deal I got was like 8%. I don't know, somewhere between 8 and 12%, but that's for the year. And at the time I was getting like 3% a week at the money return on capital, which is 150% returns for the year. So I'm paying the bank 10% and I'm getting paid 150%. And kind of like those odds. So I love that move, man. Not financial advice. 94 feels like Sailor did buy comparing Bitcoin and the MSTR charts right now. I hope a combination of both. I would like a 29K Bitcoin buy to hit. 500K would be so bullish. Why not? I hope a combination of both. I would like to hit a 29K Bitcoin. Oh, like he purchased 29,000 Bitcoin and hit 500,000 total. Hell yeah. I mean, it seems like they've got to slow down. but I still feel like they could probably double their Bitcoin in 2025, get to what, like, what was my prediction? 600 and something thousand or 800? I don't even remember what my prediction was. Keith says, any thoughts on writing the shorter near the money calls with IV rank low versus the longer ones? I'm thinking it lowers the risk of being caught in a call with IV going up. So I didn't really take my own advice on what I'm about to say because I sold 7 at the money. This makes the most sense to me. So there's the trade-off between choosing your strike and expiration is you slide the strike closer to at the money when you want to collect a bunch of premium, and you slide it out of the money when you are willing to collect less premium and more call away value. So if I'm bullish and IV rank is down, it seems like logical that in this environment, what I should do is sell way out of the money because if the premiums are not that good compared to historical values, then I should emphasize the call away value over the premium since I'm bullish on the stock and the premiums are lower. It makes sense that I would go up here and sell, you know, the 400s or something, collect a little bit of premium since premium's not that good anyway. Or if I'm going to sell out of the money, then maybe go out to March and sell something like, 100% out of the money, like what, the 680s or something, right? That's a similar amount of premium, but with a ton of upside built in. However, I would have to sell so many of these to collect, the money to pay my bills and whatnot, that I would be limiting more contracts by doing that. Now, granted, I would be limiting more contracts, but building a ton of upside in them. But I think to your point, yes, based on the current environment, it probably makes more sense to go farther out of the money and be focused more on the upside since I'm so bullish and the premiums are down. But I have I have so many long calls that I just have a lot of drag on this account. There's a lot of decay here. And for the way that I have this account structured, I have so much leverage that I kind of felt like I just need to the easiest way for me to collect a bunch of theta is just to sell these at the monies for next week and just kind of get it over with. So, optimal scenario, I think, would be more like what Climb is doing. But his account is so is so big compared to what I'm trading. I mean, he can kind of get away with doing just literally whatever he wants to do without thinking. I mean, I'm sure he's thinking, but like, you know, he doesn't probably have to go in here and be like, "Oh, I'm losing $1,000 a day on my long calls and how to mitigate that." He can just power through any of that shit, and it kind of just doesn't matter. So I like the way that you're thinking. I agree 100% that in a low IV environment where the premiums are not paying that much, it probably does make sense to go out here and maybe even slide up to like the 500 strikes and collect even less premium. But I'm also trying to keep true to the option selling philosophy. and trying to keep a little, at least a little bit of positive theta in this account. And the easiest way to do that was just to smash 7 at the money covered calls. So this might not be optimal for this environment, but at the same time, if I didn't need the cash, I'm gonna have to withdraw this and pad my checking account, but I would have plowed all of that money into June 1080s or July 1080s and bought a bunch of leverage with in this low IV environment. So even at the same time that I'm selling short-term volatility in a bullish environment with low IV, I can still sell at 7 to 45 days to expiration, which is the optimal kind of like seller sweet spot, and then I can buy into a more optimal long position, which is, 90 days plus, 133 days plus, 161 days to expiration here. Tone, what's going on? FYI, I noticed for my broker, Wealth Simple in Canada, selling my covered calls, the price fluctuates wildly at some strikes. The 407.50 gives $1.20, and when I click on 405, it'll pay 101. Big significant differences. Okay, so that's just one strike. All right, maybe in their algorithms of offerings of rates, it's almost like there's sweet spots. Makes a big difference in what we get, just so you can keep an eye on that. Yeah, absolutely. And each strike is, the market makers are doing their thing, but there's also individual investors like us out there in the market. This okay, so this is Well Simple Canada, but I'm sure it's the same. So 407.50. Is that for next week? When is that for? Yeah. 130 is the mid price, and 405 is 101. Yeah, that's wild because the 405 should pay more, not less. But where I was going with that is, so each option price is also the combined buying and selling activity for that individual strike. So there's actually like there's a market of people in the 405, and there's a completely separate market of people in the 407.50. And if the people if the people at the 405 are willing to buy or sell at a different price than the 407.50, that's what the price is. And so absolutely there can be some weird disparities where, just looking at this chain, it's, 158, 148, 138, 130. If you notice that the increment changes, or like it kind of goes backwards and you can get more. Now, a lot of times what happens when you click in there is sometimes you'll see a big wide bid ask spread, and a lot of times the platform will only show you the mid price. And if someone's bidding, like sometimes the 50-cent ones are not as liquid. So let's see, 121 volume, 131 open interest. Yeah, so there's double the volume and open interest on the whole numbers versus the 50-cent strikes. And sometimes that can affect the mid price that they tell you, but you can't actually get filled at the mid price. So sometimes you go in here and you're like, oh yeah, I'm going to get an extra $25 on this option than this one, and then you can't get a fill. The bid ask spread here is not bad. So I'm not saying that that's the case in this example. But weird things like that can happen if there's a really unpopular strike. Like people really like the whole numbers and they like 400, 410, 450. 400 and 450 are going to be more liquid usually than the 402.50 and the 407.50. So exactly what you're talking about is definitely something to be wary of. And if you can get a good deal at a different strike, better than another strike, absolutely take advantage of that. So that's an excellent finer point um, to discuss. That's kind of like, once you get the basics done, looking for those little places where you can scalp a couple of extra bucks here and there is definitely worthwhile. Appreciate that. Tone says, also curious to see if the premium rates vary with the direction of the stock, going up versus down. Do you know if it does? I know IV is huge for premium rates. That's why MSTR rocks and Sailor saying option traders love volatility. Yeah, I can't remember which Greek it is. Um, okay, so Vega is the implied vol, the extra premium for implied vol. So it might be Vega, but it could be one of the secondary Greeks. I can't remember exactly, but most stocks like your Apples or Microsoft or probably even Tesla, the biggest implied vol spikes are when the stock drops rapidly because that induces panic. So whenever there's market volatility, the VIX blows up and option prices generally soar when there's fear in the market. And that's usually when the market is collapsing and prices are going down. So for most stocks, when the price goes down, it pumps up the implied vol and the options prices. For strategy, it's one of the rare stocks that implied vol actually gets pumped when the price goes up. So when we got the March rally and when we got the November rally, the price was soaring, and you can get spikes like that as well. Like I think a year or two ago, Nike had some crazy earnings call, like everyone was missing, and they were like the only stock that didn't miss. And because of it, I mean, the price just went up like, I don't know, 20, 30% the day after earnings. And when something rockets up like that, you can get a little bit of an IV spike, but nothing like what we see with strategy. So that's kind of like a double benefit for placing your covered calls after a rally because number one, you've already collected the upside in that move. So if strategy goes up 20% and then you put your covered call on, you haven't limited your upside on that 20%. You already put that in the books. And then whatever you sell your covered call on after that, IV's pumped, the option prices are going to be higher. So you've already captured your upside and you get to capture the premium because of the spike in IV. That's like that's just like double dipping on profits with strategy options. And then the other piece of that would be, my longs that I'm dying to sell off for profit will also get pumped with that IV spike. So that's just kind of like another beautiful thing about strategy options. All right, Bitcoin here. Can you briefly describe your general strategy right now for covered calls, weekly, monthly, at the money? Yeah. So for me, I got to pay bills, right? I just paid my first of the month bills, but I got some I need to do again. This stuff's due on like the 15th or something. So, um, if I didn't need any money, I probably wouldn't have any covered calls on right now at all. I'm kind of in Climb's mind frame of I don't know if it's going to happen in February or March or April or May, but it just seems like the coil is tightening. And even if we see a dip to 250 or something, it just seems like that next rally is inevitable and not like 6 months away. It seems like it's just around the corner. So if I had my actually, if I had my way, and let me just say this is double plus not financial advice, but if I was just gonna YOLO, I would probably just take my entire account and and plow it into, like, the July 1080s. Just the entire thing. No covered calls, just how many can I get? And if I didn't get a pump by April, I'd just roll the Julys to October. Hopefully, we'd have Octobers by then. So September, December, whatever is available. And I would just keep doing that until we get the face melting rally. And then I would just, uh, roll around in my piles of cash. But that's risky as shit. And and you kind of can't build a video or a channel around, uh, well, I guess you can. There's there's some there's some Bitcoin influencers right now that are that maybe they would say that was bullish enough, that are actually probably making a living on recommending trades like that. So, well, not to say they recommend trades, but built on the hype train. So yeah, if I didn't have a family and bills, I would legit just plow it all into the fucking July 1080s and roll the dice. And I think that would probably be like optimal profits. Um, but since that's not on the table for my situation, I have a little bit of a diversified portfolio. So I've got these leaps that are in the money. Each one of these entitles me to sell a covered call against. The easiest way to build a poor man's covered call, which is what these are, is at 45 days to expiration. You can kind of get yourself in the ballpark if you take the long strike, add it to the value of the long strike, and as long as I'm selling 200 plus 175, so anything above the 375 strike is probably going to be fairly constructed safely. I decided to go with the 450s. I wanted to build a little bit more upside into these positions. Um, and this kind of pays for the decay that I have in the leaps themselves. Um, but kind of as I explained, as an option seller's account, I need a net positive theta here. And the easiest way for me to just plow a bunch of theta into this account was to sell some at the monies. I don't think these are necessarily optimal, but the only way for me to create cash is to sell covered calls. Now, I could have sold 7 of them and collected about the same amount of money probably if I went up here, right? At the 450, I could collect the same amount at the money for 7 days as I can at 450 with $100 worth of call-away value, but 45 days. Now, the trade-off here is that I have to wait 45 days to, like, book this profit. And in 2 to 3 weeks, I might have to buy it back for 5 or 600. So that 1,100 profit really, I can't really, like, count on that money for at least 2 to 3 weeks, really 45 days. But I'm gonna have to settle up on this bet next week. I don't have to wait 45 days for it. And if I get wrecked on this one, then I will pay for it with all those long calls that I have purchased. But then I can also just roll it and sell 7 more covered calls and offset that loss. So I don't have a diversity of stock tickers, but I do have a little bit of diversity of positions. I've got some 45-day stuff against my poor man's covered calls. I've got some at the money stuff against my shares. And you have to be careful to construct your poor man's covered calls. But when you're selling against shares, you can literally just sell any strike you want. The 100 shares fully covers it. So I don't even have to think about this. If I want to sell at the money, I can sell at the money. If I want to sell next week or 2 weeks or 45 days, I can do whatever I want against shares. Fully covered. I am of the tasty trade philosophy. So I will either sell my out of the money covered calls at 45 days to expiration. Doesn't have to literally be 45. It can be anywhere between 35 and 52 is probably in the sweet spot. Their research shows that theta accelerates at 45 days and lasts for about 2 to 3 weeks before gamma starts to increase. So theta continues to increase all the way to 0 days to expiration, but gamma is not increasing as much until about 21 to 25 days to expiration, I think they said. So that's why when I want to do an out of the money option, I go to 45 days to expiration. And if I just want to get paid a bunch of premium at the money, I just go 7 days out. Let's just get it over with. I'm either going to collect this money or I'm going to get wrecked. And that ticked all the boxes for what I needed it to do. I had a video on like whether people should even sell covered calls or not, and you have to ask yourself the question: does this option meet my goals? If your goal is just to generate cash and premium, then that's just easy. Like you can sell any call, short dated, long dated, at the money, out of the money, doesn't really matter. It generates cash. There's 100% chance that if your goal is to generate cash, it generates cash. If your goal is to have the super optimal strategy that makes the most money, it might not. It might underperform just holding shares. It might underperform. It might outperform, but it might not. There's no guarantee. So, selling out of the money satisfied my goal of generating a net positive theta for this account. Selling these at the money satisfied my goal of basically paying for all of this drag on theta that these long calls have. And it also gave me some cash that I can withdraw and pay my car note with. So this particular option may not have been like the most optimal position that I could take. However, it did meet my goal of generating a bunch of cash that I can use to keep the lights on. Do I know if Strike will be available in Robinhood? I do not know. I checked this morning and it wasn't. I'm assuming we're all going to be able to get our hands on it, probably for, it's going to cost us more. I'll be interested to see if they have options too. I would assume that the vol is going to be much less since it's literally constructed to be a less volatile product. Bitcoin Hero says, would you say your weekly return on covered calls is still 3% per week at these prices? It literally is, because I just got paid 1065 and the value of strategy is 340. So 1% of 340 would be $3.40. And 3 times 340 is 9, 10.20. So I've got paid basically 3% return on capital for every one of these covered calls. Now, the ones that I sold yesterday and got paid, let's just round this to 1,000, probably is much less because best case scenario, if I sold it for 10 and I buy it back for 5, that means I kept $500. If I kept $500 for 2 weeks, that means I kept $250 for 1 week. $250 is only like 2/3 of a percent per week. But I've got $100 in upside. So like 25%, like 30% call away or call away value here. So for these, I'm willing to take a much lower percent for some upside. And actually, it's actually more than that because since this is a poor man's covered call, I didn't pay $34,000 for the shares. I only paid half of that. So 2/3 of a percent actually ends up being like 1 1/3% a week. So my return on capital for these poor man's covered calls is only about 1% a week, but you can see I have a ton of call away value built in. My return on capital for these weeklies is 3% returns for 7 days, but I have no upside built in here. So I'm taking the guaranteed 3% and I'm sacrificing 100% of the upside, which kind of sounds like suicide, as bullish as I am on the price. Um, but what are you going to do? The only other way that I can get money is to literally just sell off positions, right? So if I needed 5 grand, I could sell 15 shares of strategy, right? So that's the trade-off. Do I want to sell 15 shares of strategy and take that money off the table? Or do I sell 7 covered calls and potentially take those, potentially take 700 shares off the table? But maybe the price stays at 340 and I just get free money. We'll see. We'll see in 7 days. Oh, Tone says picking up a Cyber Beast as my Model S is a write-off from massive hail damage. Showing my support for Tesla, Elon, and my USA fam. Wish me luck. And of course, I clicked on like and repost. Appreciate it, Tone. Um, yeah, I reserved my Cybertruck a year or two ago, and they keep trying to get me to pick one up. But I'm waiting. I'm waiting for the Founder series to be done with. I do want one, but I'm gonna wait for them to work out the kinks, and I'll just wait for them to get the mass production going. Um, I might end up with a Model Y before a Cybertruck. I I don't know. I know they look wild and kind of crazy, and my wife just thinks they're the ugliest things that she's ever seen. But yeah, maybe we'll race Cyber Beast one day, Tone. Tone says MSTR pumped crazy last March. Probably not related, as it's usually a 4-year cycle. Keeping my fingers crossed. Yeah, I'm thinking we get at least one in 2025. The next rally that we get like that, like if we do another 4x in 4 weeks, I'll take all my leverage off and I'll just go to straight shares. And I'll probably split my account up 50-50 between strategy and Tesla. So I'm definitely on board with the Tesla fanboying. He says Strike is available on E-Trade. No kidding. Emperor says you can buy Strike on Schwab, Fidelity. What's IBRK? Something brokers. I forget. Not Robinhood. Schwab and IBKR are my brokerage accounts. It's available to everyone now. And more people are saying Strike on E-Trade. Thanks, Paul. 94. I'm dead on looking at my June 25-30 calls, hoping I gain my money back and more, which I should. They can't keep us down forever, but damn those market makers mess with our emotions. Yeah, they definitely do. Yeah, my Junes are underwater. I've lost about 80% of their value. Bought them for 2,500 and they're worth 5. Yeah, it kind of sucks. I think these were all profitable at one point too. I think I've had them for 53 days. So January, December. Yeah. I think I could have sold these at profit at one point, but what are you gonna do? You're gonna get wrapped in green? I was trying to figure out if I should do Bitcoin orange and just have the ugliest, gaudiest, can see it from a mile away. You know, might as well. Yeah, before I got sold on strategy, Tesla was like my go-to. That was like generational wealth building ticker. And but after Quant Bros 1, I just sold every single Tesla position I had and went all in. All in. But yeah, the next time we get, IV pumped to 70, 80, 90, 100, we get another rally like we had in March or November, taking all the leverage off the table, probably split this account up 50-50 with strategy, shares, and Tesla positions. Depending if Tesla is also up, I'll just go into maybe Tesla shares, but I'm thinking I'll probably pick up a bunch of Tesla leaps as well. I think both of those companies are disrupting and the clear winners. They already, they both have Bitcoin in the books. Tesla's definitely not even remotely a Bitcoin treasury company, but the fact that they own it is enough. Their Q4 earnings call, I think, was proof positive why it's just having it on the books is a benefit to the shareholders. So my ETF will be called the Mag 2, and it's going to be Tesla and strategy for like the next, I don't know, 2 decades. And as the price, like as the price fluctuates, I'll rotate in and out of leverage when I think it makes sense. If the MNAV ever gets down close to 1 again, I will sell kidneys, both of them, and I'll just plug myself into a dialysis machine until we can get nanobots like injected into our veins that'll perform our functions of the kidneys for us. And just, yeah, if we ever see an MNAV that low again, I'll just sell the farm for it. But I basically just see myself having I could add another third position if something becomes very attractive, but I'll probably over the next 10 and 20 years, I'll just be rebalancing. If strategy's pumping, I'll rebalance into Tesla. If Tesla's pumping, I'll rebalance into strategy. All right, Tone says I've got a couple of non-Bitcoin stocks when Bitcoin drops, as I noticed we both don't like to leave money in cash. Yeah, absolutely. I don't stop selling buying positions until I have less cash than I can buy one share. Um, I dumped into WFC and let strategy or Bitcoin recover. What's WFC? Not Wells Fargo. What is WFC? Oh, it is Wells Fargo. No shit. Okay. Also did a dividend capture, and if I wait for the price to go over the dividend drop, you can make extra cash. Okay, cool. So your cyber beast is iridescent. Nice. Or whatever looks on sale, like Nvidia, Tesla, Costco, Wells Fargo, is boring and safe for a temporary cash position. Yeah, as long as it's not cash. Cash is trash. Ah, so you park it in there and then you collect a dividend. Nice. That makes sense. They have a pretty attractive dividend. I know my best friend's from the Navy. He likes, I think it was Enbridge. When I started telling him about options, he's like, "Oh man, there's these dividend stocks and you just get paid for doing nothing." And I was like, "All right. All right, cool. We're all caught up on the chat. I appreciate everybody tuning in, and you're not bullish enough. I don't think I'm bullish enough, and I'm pretty freaking bullish. All right, be good, y'all.